Good afternoon. It is Tuesday, December 11th, just a bit before 2:30 p.m. My name is Stock Darts, and in today's video, we're going to explore the idea of getting defensive with your holdings in a market that it's not really doing very much and is looking pretty ugly into the close of 2018. Right? You take a look at this chart of the S&P 500, and you can see we're having an ugly day today. Now, we are getting a bit here into the afternoon, and hopefully, we can maybe close with a bit of a bounce and put ourselves above this pretty key support level around 263 and maybe confirm that the bulls are still willing to defend this level. However, the way we opened nice and strong and then pretty much sold off the entire day up to now, and you take a look at the 5-minute chart and see what I'm talking about. We had pretty much a complete sell-off, and then we're finally starting to get a bid here, which is really nice, right? Because maybe we can get a nice little wick going and sort of save the day with a strong close. But overall, I think that what we're seeing here is indicative of a market that's still pretty fearful and still willing or ready to just sort of cash out at the drop of a hat and go down, right? We're finding people that are quick to abandon their holdings, and this is forcing the market to quickly zoom back down. And again, just take a look at what happened over the last week, right? We had a nice strong bounce off of this level just maybe 2 weeks ago, and we had a real strong rally right up to 280, and then we just gave it all back in basically 3 days, and in 4 or 5 days we're well below there, right? So there's still obviously a lot of selling pressure in this market, and I think at this point it warrants us starting to explore some defensive plays and looking at how we can maybe start shifting over to some safer names, particularly for those that are not able to just go straight to cash, right? If you're a nimble swing trader that doesn't have any long-term holdings, then it's really simple. You just stop trading or take very few trades and close out most of your trades. But if you're someone that manages a little bit more of a portfolio where you're more along the lines of diversifying and having kind of your hand in the market at all times to take advantage of the long-term nature that it always tends to go up, then you tend to need to hold the stuff even through corrective environments, right? And so if you're one of those types of traders, you're someone that just wants to maybe not be worried that your holdings are going to tank during this time, then maybe you want to go towards some safer names that, while there's still the potential for a move down, aren't going to necessarily have the same volatility as maybe a tech stock or a small cap, right? So the idea that we're going to explore today is we're going to look at two different areas. We're going to look at utilities and we're going to look at REITs, commercial REITs, right? So first, let's take a look at XLU. It's the ETF for utilities. And bam, what do we see here? The exact opposite of the markets. Holding at highs, trading to new highs. Had a really nice breakout just a week and a half ago off of a nice base, right? So you're trading utilities right now. You're thinking to yourself, what correction are we talking about? The market's doing great, right? So this is a really good area if you're looking to stay defensive. If you think that the market's still going to correct into December, even into January and February, maybe you want to look at something like this, right? The other thing we want to look at is IYR, and this is the real estate ETF REITs. And again, you can see doing pretty well. Now, not quite as strong as the utilities, but we've had a very nice upwards trajectory, a nice channel formed here, and we are starting to approach new highs. Not there yet, but overall it's been in a pretty steady move up while the market has been strongly correcting, right? So these are two areas we could look at relative strength and maybe sort of hold some of these while we try to weather the storm as the market continues to correct and try to stabilize at its current levels. Now, both of these are part of a strategy I tend to use during times like this, and actually a strategy I like to use at all times, which is finding names that maybe aren't that volatile and have a nice dividend, and also can sometimes have enough options liquidity for me to sell covered calls on them. And in that way, I sort of manufacture my own return without having to watch them go up. As long as they don't really go down, then you end up doing okay, right? So if you pick up a certain amount of percentage off of a dividend, and you're also able to add to that by covering it with calls, you in turn make your own return without even really having to worry about it necessarily trending upwards. So that's the benefit of something like this. Now, of course, if the market is doing well, then these things just don't move up enough, and you're better off having your money in names that are going to go quicker. But in times like this, where the market is really struggling, then these names make a lot more sense because they tend to not drop as quickly, and they hold their value a little bit more. Because again, this is where the money goes to stay safe because it's less volatile, right? So let's go over to Finviz, and we're going to go to our screener. And I'm not going to mention too many specific plays. I just want to give you a broad idea of how we want to look for these plays and what we're going to really search out, right? So I'm going to go over here, and then for average volume, I'm just going to weed out the really, really poor liquid names. So we're going to go maybe over 200K. If I was looking specifically for options plays, then I'd make sure that they have options, and I'd probably go for a higher average volume to make sure I just get the big names, right? Now, over here for industry, first thing we're going to do is we're going to go through a couple of utilities, right? So let's go, unfortunately for utilities, you have to go to each specific one, right? So, or each specific category. So we're going to look at electric utilities first. You can see we've got 40 names that trade over 200K. And we come over here to the charts. You can see there's quite a few nice names, right? A lot of stuff trading at highs. Still some pretty low volatility stuff we don't want to mess around with, but or low volume stuff. But you take a look at, say, Amerin. Amerin's doing pretty good. It's at highs. AEP's at highs. You got CMS over here. There's a lot of good stuff here. Dominion's doing really well, just broke out. And you got something maybe like DTE hasn't quite broken out yet, right? So if you're looking for something where you don't want to chase action higher, maybe you look at something like this that's still sort of forming a pattern ready to break out, right? And watch as that plays out. Or you can, like I said, maybe you can go to something like Dominion. That's already broken out, and then maybe play it as it continues. Now, it's hard to chase this action higher, but you can see that there's some good names on here, right? And depending on what you're looking for, there are some nice patterns that are being developed. Here's another one. If you want to play more value and you want to find something that's still basing out, you can play something like this and watch as it sort of finishes this sort of pattern here. Right? I think it's kind of a, I don't know that I like that trend line like that, but maybe something like that. More importantly, you've got a something like this. This is actually kind of a tough one, but you can see clearly once it gets above about 480, it's going to be clear of all these trend lines that are kind of vague right now because of where the points don't really match up that well. But once it gets above maybe 480 or 485, 486, it looks pretty good. And so plenty of stuff here, right? And we don't even have to go to the second page. We can always, next up, go to, say, gas utilities. And take a look for stuff there. You can see Centerpoint's doing good. AGR. Gas utilities in general don't look as good as the electric ones, but some of them are all right. I passed up diversified utilities. So for diversified again, we've got some stuff that's sitting at highs. And we have stuff like this that's still kind of consolidating. NEP looks like one that maybe has still sort of waiting to break a trend line, but would be a clear trade once it does. Energy looks really good, although it already broke out. The problem with these, some of these have already broken out. But again, what we're looking for right now is not necessarily specific trades as much as you want to start putting some of these in your watch list, and you want to start shifting towards and holding some of these instead of just trading, trying to stick to all the volatile assets, right? Again, the whole idea here is to get defensive and to look for safer names where we could weather the storm. So this is just the first process here, right? Next would be to look at the dividends that they yield and stuff like that. SBS looks okay. Again, of course, American Waterworks looks awesome, right? I mean, I don't want to highlight every name that's at highs, but this one looks really good. But I also like to look at names like this that haven't really done anything yet, but are building up and making positive strides towards working upwards, right? And so here we have one. It just completed a nice base, nice double bottom long term, and is now consolidating above a pretty critical $7 area. And I mean, really, it needs to get above 773 to kind of continue. But you can see that it also has this nice little sort of short-term downtrend that it's been sort of making its way out of right now. So stuff like this looks pretty good. Now, the other thing I want to focus on is we can always go to REITs, right? And again, there's a bunch of them. Diversified healthcare, hotel. I'm going to look at office and actually retail first. And you'll see there's some nice ones. There's going to be some ugly ones as well. But this is another area that tends to do well, not just when the market is in a defensive stance, but also when rates go higher, right? These tend to do better because they benefit off of that. And not quite as exciting as what we're seeing on the utilities, but there are a few names that look okay. RPAI looks okay as it tries to consolidate at highs. This is a good one. This thing just always goes up. It's obviously at highs. It's not a good risk reward right now, but you should put this on your watch list and wait for the next pullback. This is a name that has done well for a long time and seems to just always do well. And it's a nice name to have in a portfolio. Alright, so we've got that. Let's look at some office. Alright, and so the general idea is you cycle through all of these, and you can see there's some good stuff in all of them. The REITs, you can not necessarily as strong as utilities, so I'd recommend utilities probably is a little bit safer right now. But in general, you will find good names on here too. The healthcare ones look pretty decent as well. You can see we're doing good with HCP, MPW, NHI. There's quite a few here that are doing okay. Yeah, this is actually a good one. You might want to focus a little bit on some of these. They tend to be doing good as well, right? So that's the idea for today. Again, I didn't want to make any specific trades. What I wanted to do is give you an overview of some areas you could look at for strength, particularly as this market continues to kind of stagger and try to stabilize at these levels, right? So if you are really worried about where we are in the market, and again, I think with the way we're closing today, maybe we still build off of this and try to make our way back higher. But overall, it still makes sense to maybe shift towards some safer trades and some safer names. And hopefully with this video, you have at least a starting point now as to where to investigate and look for other stuff. That is all for today. My name is Stock Darts, and if you enjoyed this, feel free to hit the like button or the subscribe so you get notified whenever I put up a new content. You can also find me at patreon.com/stockdarts. I have a lot of trade ideas on there, and I tend to put content on there pretty consistently throughout the week, so go ahead and visit that if you want to see more of my content. Other than that, have a good rest of today, and we'll see each other again in the next video.